Ethereum treasury company Bitmine is partnering with a YouTube powerhouse, making a $200 million investment in Mr. Beast's company, Beast Industries, joining us exclusively ahead of today's Bitmine stockholder meeting. Bitmine chairman Tom Lee. He's also head of research at Fundstrat, chief investment officer of Fundstrat Capital, and a CNBC contributor. You got to explain this to everyone, including me, the rationale here, Tom.
Good morning, Joe. There's a lot of strategic rationale to this move made by Bitmine. As you know, Bitmine is the largest Ethereum treasury company in the world, the largest holder of Ethereum. And it's our view that Ethereum, which is a smart contract platform, is the future of finance, where digitalization of not only dollars, but stocks and equities is going to take place. And over time, that really blurs what is a service versus what's digital money. And that's where a collaboration and investment into Beast Industries makes sense. As you know, Mr. Beast is the #1 content creator in the world. His content is watched more than, for each of his videos, 252 million views a month, which is more than the Super Bowl. And really, he is probably the iconic person for Gen Z, Gen Alpha, and arguably millennials. So he is probably one of the most important creators in the world. Beast Industries, according to Jeff Hausenbold, is planning to create a future platform of services, which includes digital items and even financial services. And that's really where a collaboration between Beast Industries and Bitmine will make sense. So I think it's part of this sort of evolution of digital platforms and money, and I think it's really uniting the #1 creator in the world with the biggest Ethereum platform in the world.
Kind of getting it. Is there a reason that you like the Ethereum blockchain more than Solana, or will both exist? Could you have done this with Solana?
I think there is going to be room for multiple blockchains. Ethereum is the largest blockchain in the world. It is almost 70% of all tokenized assets are taking place on Ethereum. And Ethereum is extremely resilient. It's had 100% uptime since inception. The only blockchain smart contract platform to have never gone down.
Right. But I guess there are differences, and each has its people that think that there are certain features about Solana that are better, people that think that there are certain, and it gets very arcane, and we get down into a rabbit hole. So what would the future look like for the digital tokens that Mr. Beast that would be traveling across the Ethereum network? What are we talking about? Just describe it and how it would work.
Well, I think it's really going to be up to what Beast Industry unveils. So, I think if I was to imagine things that'll happen, #1, we know that stablecoins have become increasingly mainstream. It is really the breakout product of 2025. And we also know that Wall Street firms like BlackRock and Robinhood want to tokenize almost everything from stocks to credit to real estate, and eventually things like intellectual property and even loyalty points. I imagine that those are the kind of products that could be emerging on any future services platform. And that's where it's going to be a natural fit between a company like Bitmine and what Beast Industries does. But from Bitmine's perspective, Beast Industries, is a very unique company. I mean, for us, I think as just an investment and, being part of the cap table where there are some really high quality venture capitalists and other investors represents a good investment opportunity for us, or what we call a moonshot.
Can we just get your viewpoint on the January stock market action in the S&P and in crypto? And is it, I think right now it's kind of going along in the way that you told us it would at the end of last year? At least I think we were down around 80,000 on Bitcoin. That's recovered. The stock market started out pretty strong. It's had a couple of rough sessions, but you expect pretty good gains this year after a mid-year slump.
I do. On markets broadly, I think it was good news that the first 5 days of January was positive. It's a really good omen for the rest of the year, and I think it puts upside to our 7,700 for the S&P 500. I think some of the turmoil in the past couple of days in financials and the broad market, along with crypto, do reflect how policy, especially Washington, picks winners and losers. As you know, Washington is trying to cap credit card rates. I think that that's going to hurt financials if this is implemented, because it's going to reduce their ability to offer credit to many types of consumers. But at the same time, the fact that the Clarity Act is moving forward is really good for crypto. Crypto really got hurt October last year, so it is our view that we're going to have a pretty big recovery as we put more time between that moment. And so we like Bitcoin. We do think it's going to make a new all-time high this year, and we're probably more favorable towards Ethereum, and we expect the Ethereum to outperform Bitcoin.
This is interesting, Tom. Someone wants to know, you haven't reached 5% yet on Ethereum, and you're making this weird investment in their view. Can they trust your strategy for BitMine?
Hopefully that investor tunes into our stockholders meeting today, which we are streaming from Las Vegas. Okay. There, we're going to unveil our 2026 strategy for BitMine, which has 4 pillars of growth. One of them, of course, is getting to 5% of Ethereum and optimizing the yield. But it's going to be natural for BitMine to also productize its platform. So working with Beast Industries and Beast is a way for us to productize the huge community of BitMine.
I think Andrew's a Mr. Beast. You're watching a Mr. Beast thing right now, aren't you? Because you're not asking Tom anything.
No, I know Jimmy, and I think Jimmy's extraordinary.
Is that Mr. Beast?
Yes, Jimmy Donaldson. And, he has a remarkable audience. And Jeff, who's their CEO, who we've had on the broadcast, and I've interviewed as well.
I remember we had him on. I don't know what he's talking about. Yeah.
He's had amazing, by the way, he's an amazing investor, was an amazing operator for a very long time. So I'm fascinated to see where
you're in the demo. You're in the key demo, like Generation Z or something. What are you?
I'm Generation.
You know what? We can't pigeonhole Andrew. Tom Lee, thanks.
Tom, we love you. We got to go.
Carl and Sarah, thank you very much. Welcome to the Halftime Report. I am Frank Collin in for Scott Wapner. Front and center at this hour, resilience and rotation. Stocks are trying to rebound after back-to-back down days, with tech and banks both outperforming after some very key earnings reports. Joining me for this hour, we have Jim Leventhal, Malcolm Etheridge, and Bill Baruch. Before we get this conversation started, a very quick check of the markets. You're going to see a very different picture than we saw yesterday. In the green across the board. Right now, the S&P up just about 2/3%. The Dow up just over 370 points. The NASDAQ leading out of the 3 majors up just about 1%. But you all see the Russell there up about 1 1/4%. Jim Leventhal, I'm going to start over with you. Why don't we start with the banks? Yesterday, we saw very solid earnings from 2 of the big banks. They still traded lower today. Very different story. Were the banks just priced to perfection, very similar to what people say about the markets, or were these earnings reports just so good that investors had to go back to financials?
Well, Frank, I think being priced to perfection was part of it. Obviously, there was the news from President Trump on credit cards and limiting it to 10%, which came out late Friday after the market closed. And that actually has some wind behind it by virtue of Senator Warren being involved as well. Most people don't think that's going to come to pass, but it certainly shows that this year leading into a midterm election, the president and his administration have his eyes on affordability, and to the extent that the financial sector doesn't help out, they've got their eyes on it. Now, ultimately, you put that together with a sector that had run a lot, and it's not just year to date. There were massive outperformance last year from companies like Citigroup, which was in the crosshairs yesterday. And if you look at JP Morgan, that's a stock that's had a 5-year run that's just really breathtaking. So there was some priced to perfection. However, the earnings reports generally good. They weren't great, by the way. I mean, JP Morgan missed on a few metrics. Citigroup, which is a favorite of mine, there were some expense issues. I don't want to overstate it, but it wasn't the greatest quarter. They have a long-term turnaround that is still on track. I'm happily owning the shares, but they weren't perfect earnings reports. So you put all that together, and it wasn't hard to see that some air might come out of the sector as it did yesterday, but the value is there, hence there's a rally today.
All right, I want to look at two of these reports today. I know you were kind of going back to yesterday. By the way, you didn't want to overstate about Citi? That's a surprise. You like to talk about Citi.
Oh, I forgot that's our running joke. I'm sorry, I should remember that.
But we got to get to the numbers, because that's what people are here for. Morgan Stanley, when it came to investment banking, that was up 47% year over year. Also looking at Goldman, equities trading up 25%, investment banking also up 25%. And I think these reports, I would think, Malcolm, they led you to two of your first-time buys of Morgan Stanley and JP Morgan since Morgan Stanley reported today. Why don't we start there?
Yeah, so I've been championing those three names, calling them the big three for probably a year now, but I haven't actually had an opportunity to own any. And I think the president's proposal for a 10% cap on interest rate on credit cards gave me an artificial selling period to give me an opportunity to start buying shares. So any pullbacks we get going forward, I intend to keep buying there. I think that IPO activity is going to remain strong. We saw basically twice as many IPOs in 2025 as we did in 2024. There's some really big blockbuster ones that are slated to come this year. And the big three, Morgan Stanley, JP Morgan, and Goldman Sachs, basically participated on every single, or one of the three of those names, I should say, participated on every single blockbuster M&A transaction last year. And I anticipate that's going to continue this year. So as they continue to ring the register, those three banks specifically, I think, don't really, net interest margin isn't really the metric that matters as much for those three banks specifically. And so regardless of what interest rates do or how banks are positioned to profit from the declining interest rate environment, I think that those three are going to do very well, specifically because of all the M&A transactions, the IPO activity, all that's going to happen.
All right, walk me through this trade one time, because if the catalyst here was the pullback based on the idea of capping credit cards, well, one has the most exposure to credit cards, JP Morgan Chase. The other one has none. Of course, we know the president's going to be in Davos next week, and maybe surprisingly to some people, he's going to have a domestic-focused speech that he's going to make about affordability. We know that credit card caps might be part of it. We also know Jamie Dimon's going to be there. There's potential, at least, for there to be a lot more rhetoric about credit cards that could impact JP Morgan that hypothetically would kind of evade Morgan Stanley. So you're worried about another pullback when it comes to JP Morgan coming up, knowing that we have this big event coming up in Davos?
Yeah, so my point is that the transaction revenue that gets generated anytime one of these companies advises or consults on an IPO far outweighs what they're going to earn on credit card interest.
Understood,
right?
but
So
that was the entry point.
Right. And so it gave me an opportunity to buy shares of a company that had no business being down 5% on a headline that realistically probably won't come to fruition, at least not in the way it was proposed. 10% maybe turns into 20 or 25 or 30 where it probably is now. So I just think that it gave me an opportunity to be buying a company that I've had to come around to this Joe Terranova idea of buying high and hopefully selling higher, rather than these shares coming in to me, because we saw what Citi did last year, and it probably isn't going to create an entry point anywhere below where it is. All these are selling close to their 52-week highs right now. You just got to get comfortable buying high right now.
So opportunity, not an issue. Bill Baruch, coming over to you, your view of the financials right now, what we're hearing from these two companies today and seeing from them, as opposed to yesterday when it seemed like everybody was just looking for a reason to sell the banks.
Well, I think the reason to sell, I mean, that's pretty routine. You go get some excitement ahead of earnings. They're the first group to really report. And then there is a little bit of a wiggle always after these reports, no matter how good they are. Maybe one or two may avoid that wiggle. Goldman Sachs, Morgan Stanley could be those names here this time. Monster report from Goldman Sachs. It's exactly what we want to see. It's our largest name in the financial space, weight of about 3.25%, 3.3% in our portfolios. And I may like the idea, if it hasn't run so much, of buying more Goldman Sachs. JP Morgan, it worries me a little bit. I do agree with you. I think the investment banking income is going to come around, but that underperformed estimates. It was what, 2.35 billion. They're looking for 2.55 billion. That was a surprise there. It's not the JP Morgan beat that we've become accustomed to, and so I'm taking it for a mulligan here. It has the credit card rate cap pull down. It had the post-earnings pull down. So I'm with you here. I think it can find support here, but I'm not looking to buy more JP Morgan. It's about 2.7 weight in our portfolio.
All right. Bill, coming over to you right now, looking at Coinbase. Coinbase down about 3%. Looking at crypto more broadly, Bitcoin's down about 1%. Ether down about 1.5% again as Coinbase voices their opposition to that bill. You're in on the Bitcoin trade. What's your view of the bill and just the crypto market in recent days?
Yeah, we own IBIT in accounts. We own Coinbase as well. Coinbase may not be one of our best positions, but we're looking at it long term, sized appropriately. With the idea that I think the stablecoin legislation, it is a blow here. That we were looking forward to getting something done soon. I am a believer in the fact that this stablecoin legislation is going to come down the road, and it's going to be a tailwind to Coinbase. They do have triple-digit earnings growth. I like the name. There's a lot of support that it's trading into right now. 200 to 240. I don't like the price action this year so far. But what I do like about Bitcoin is tremendous volume as it really started bottoming in 85,000 to 90,000. We've seen it kind of come out some capitulation type volume. So, we're not leaning into it where it's a make or break for us, but we look at it as long-term investment, and I think it's going to play out positively over the next 6 months. Yeah, again, Coinbase shares down just about 3%. I want to go back to earnings now. Another big earnings story outside the financials. It's really Taiwan Semi driving the semi space to a new record high if you're looking at the SMH. Our Christina Partsinevelos, as promised, joining us right now here at Post 9. Christina, looking at this report, is it exciting that we saw profit jump by 35%, or is it more exciting the fact that this is the company that supplies so many other companies like NVIDIA, AMD, and Apple?
The second. That's because they have a view into the future because these customers are spending with TSMC. They're the largest chip contractor in the world, and they're saying that they're pretty much sold out in 2026 at full capacity. Their spending CapEx has increased to $56 billion just this year, which is a record for them. So that is showing that there is demand for the chips. It doesn't necessarily mean that it's going to see that these chip companies are going to see a return on investment. And I say that because the CEO of TSMC was asked on the earnings call, is AI demand real? And he responded that he is nervous about it. He used the word nervous, and that he said that with the $56 billion in CapEx, if they don't spend it correctly, it'll, quote, be a disaster for TSMC. So what he's telling us is that TSMC is growing. Gross margins are intact. They're going to spend over the next 3 years. All of their customers are spending and building chips, but we still don't know necessarily if that demand turns into future revenue streams for all of these firms.
So I want to ask you a question. So TSM, they supply for Apple, NVIDIA, AMD, Qualcomm, Broadcom, and Amazon, all the big players in there. Is this
Apple too?
I already mentioned Apple, but yes, you're right about Apple. Is there one company that this is a direct read on? Is there one company that gives us more insight as opposed to the other ones?
ASML is a great example because they have a full monopoly over the market with their lithography machines. The fact that TSMC is spending so much, that's why you're seeing their market cap hit $500 billion for the first time ever. It's reading well across the semi-cap space. And just one more point. Some may argue, but semi-cap equipment companies have really jumped over 15% year to date for many of these names. B of A, even in a note today, was saying that it's not as crowded as you think because the semi-cap names have climbed on the memory narrative, that memory is in short supply, that they haven't really climbed on the fact that the foundry business is still really strong, the logic business is still really strong.
All right, you mentioned ASML very quickly. Let me get to you, Jim. Malcolm, you own ASML, also at a record high today. Your view on the chip trade right now? We often talked about NVIDIA kind of being dead money over the last couple of months, but obviously we're seeing an acceleration today when it comes to chips.
Well, I think it does say great things about ASML as a shareholder in the sense that the $56 billion of CapEx that TSM is talking about, more than likely the lion's share of that goes to ASML, right? They're their biggest customer by a long shot, especially as you hear Jensen Huang talking about now going to mobile, talking about going to autonomous driving as sort of the next frontier for where those chips are going. So it makes perfect sense that they'd have to retool those machines or upgrade those machines to get the smaller nanometer chips that can fit into smaller devices, which bodes well for ASML regardless of where those orders come from. So I think that's a great indicator of why the shares popped 6 or 7% so far today.
Jimmy?
For Christina, one of the risks we were talking about a year ago, we're not talking so much about now, is China, at least in my opinion. And I observed that nobody's really talking about it now, and yet there was an IPO not that long ago, I think in the last week, for CMXT. I might have the letters background, but that's one of the right. So one of their semiconductor up and coming companies. Other IPOs have come out in the AI space, and I think the concern here, as I see it, is that China really does become insular. Now Now, we're supposedly allowed to sell them H200 NVIDIA chips, but they kind of don't want it. We don't know how much of that is negotiation or how much of that is real in terms of China wanting to say, we want to do it all ourselves. Is that a risk?
Of course it's a risk. The self-sufficiency of China, which is why Jensen Huang goes on these trips and continuously talks about all of the great developers that come out of China, that it's a $50 billion market opportunity. He tends to visit Asia right after Davos, so I'm sure we'll get some headlines out of that. China is moving forward. The goal for them is self-sufficiency. So even if the government or regulators approve the import of some of these H200 chips from NVIDIA, I think it's going to be a case-by-case basis. And I think it's only going to go towards the hyperscalers, the larger ones that are really building out their large language models and need the most advanced chips. But China is capable of taking Huawei chips that are less powerful, I'm making it very simple, pairing them all together, using way more power that we would use here in the United States because it's not an inhibitor over there, and producing models like DeepSeek and the next iterations of DeepSeek going forward, and Quen and et cetera. So I think that is the biggest fear, which is why sovereign AI plays such a strong role to offset that weakness that a lot of these firms had from China.
Can I get technical real quick with mentioning NVIDIA being dead money? It's moved up a lot today, and look at, for those follow the anchored VWAPs, from the closing high, we're back above there. 188 NVIDIA is actually a really exciting level to see here. If it can move a little bit higher, it goes above the late December high, and then that earnings where we reverse pretty heavily, 196. I think the space is obviously getting a lot of lift here today, and I think you're going to see NVIDIA wake up. If it gets above 193.5, 196, look out above. We're going to head for a new record high. You're going to see some tremendous flows.
All right, so right now, looking at NVIDIA right now, it's trading at about 188. So you're saying we're on pace for a record high. It's about 3% right now?
No. We're at 188 right now.
That's what I'm saying. You're saying it's on pace for a record high.
No, we're far away from record high. Record high is what, 210, 220?
No, I'm saying you're saying that's the direction it's going.
That's the direction that we're going. If we get above this resistance, I think you're going to see some solid flows. And let's not forget that NVIDIA, from a multiple standpoint, at 25 forward, is one standard deviation above it's below its 5-year average, with 28 and change. So I think it's an exciting name to keep an eye on right here.
Since you're bringing out the technicals, what's the level of resistance? Because I'm sure people are like, okay, what is that level of resistance?
193.5 and then 196. 196 was the high the day after its earnings. So this is it's chewing through and getting above that anchored VWAP, which a lot of people watch from its closing high, and I think that could start to excite some flows.
All right, Christina, while we have you here, I want to ask you a question, because I was talking to Dewarja McNeil from Longview Global earlier today just about the trade tension between the U.S. and China, and a lot of our allies kind of leaning towards China, not because they love China, just because the U.S. has become more volatile. Is there a chance that China's just using the, I guess, the customs rejection of these chips as a bargaining chip? The chips are a big part of the bargaining chip, along with the critical minerals and the rare earths. Is there a chance this is just a little bluster, if you will, China pushing back just to kind of build up its chips in this negotiation? They really do need them.
At first, I thought you were going to ask me about Canada and the fact that you have so many other countries that are pivoting to China.
There today.
Yeah, exactly. Yeah. So on terms of the trade front, we should be maybe a little bit concerned here in the United States, and I'm Canadian. That's the reason why I bring it up. But for China, of course, NVIDIA is being used as a play. They went after NVIDIA for Mellanox, an acquisition back in 2020, but they went after NVIDIA several years after the deal went through. Why? They're just trying to nitpick and find issues with the company to use NVIDIA as a poster child, or AMD, or Intel, or Applied Materials. A lot of these names have been caught in the crossfire. And just one final thing, you're talking about just the resistance point at 193. NVIDIA has been stuck in this range for quite some time, and I think that there's been this zero-sum trading game with either software versus the SMH. You see with NVIDIA, it's just like, how much upside is there? Even if you can argue the valuation has come down and it's much cheaper than a lot of other chip names. I just wonder, is that enough of an argument? And that's the reason why people have stayed on the sidelines for NVIDIA and then moved into the other parts of the play, chip world, I should say.
Well, software has been hit pretty hard here at the start of the year, and that could ask the question: where's that money going to go next? Now, obviously, there's some really tremendous outperformance in other spots. You've seen IWM really breaking out. You're seeing the staple names have a great run. Industrial's doing well, and energy doing well. But you know what? I think there's money on the sidelines, keeping an eye on some of these ones that have consolidated very well. And let's not forget, this is a big long-term uptrend. The trend is your friend, and we're really seeing this nice consolidate. I think it's going to be breaking out here.
Bill, are you saying you think software is perhaps an opportunity? Because boy, that's been tough, man. That thing, every time you think it's getting a bid, it just opens a door underneath you.
I was kind of saying the exact opposite.
Okay.
You're seeing the flows out of software. Now, Yeah, I mean, there are some names to kind of pick through now. Synopsys looks like it's coming alive. There's some spots to look at in software, but I'm not very excited about software. I'm saying that money could be looking.
To clarify.
Before we get too far away from chips, we kind of already are. Malcolm, you're also an NVIDIA shareholder. Any thoughts about this read on NVIDIA and maybe some other chip stocks that you may own?
Yeah, Bill took it technical. I'll go fundamental. I'm curious to see what the guidance related to Rubin is going to be in the second half of this year. I think that'll be make or break across the board for NVIDIA, because the upgrade from like 8 to 72 chips on a cluster is supposed to be a massive improvement for them, which would make all the difference for the hyperscalers that are still buying NVIDIA chips, but they won't have that read until probably the second half of this year. So we're kind of just waiting and hoping until we get to that point. So it wouldn't surprise me if NVIDIA stays super range bound until then, because there's no other real catalyst to get us there.
All right. Big thank you to Christina Partsenevelis. Thank you very much for your perspective and the Canadian insight. We always appreciate that. All right, coming up here on Halftime, Committee Moves. Bill Baruch is ready with the name that he's selling and also with what he's buying. The trades are next. Stay with us. Hi, and welcome back to Halftime. We have some committee moves to hit. We're going to start off with this one. Bill, you sold T-Mobile.
Yeah, it was in the bottom of our portfolio area, and it's not been exciting. The below the 50-day moving average, the CapEx is going to, I think, could be a problem here as you see competition continue to heat up. We own AT&T as well, and we don't want to own both names, and so I want to put that cash somewhere else.
All right. Did you expect the telecom to be exciting?
Well, look at what AT&T was able to do last year, and really for the last 18 months. Before it turned down a bit, it's been really exciting. And T-Mobile's a multi-year compounder, really has been.
All right, we want to focus more on your buys, though.
Yeah.
What are you buying?
Well, yeah, we're buying LNG, Cheniere. It's now you're seeing some interesting things take place in the commodity space. You're seeing the European natural gas prices really come to life, and exports is where Cheniere makes their money. This has been bottoming out technically very well. About 95% of the revenue comes from long-term contracts. I like that this being a buying opportunity. I think energy is going to be very exciting this year. That's why we're staying in the space with that buy from Cheniere as well. Exxon is breaking out. We're just increasing our position in that portfolio. All three of these names that we bought, Cheniere, Exxon, which we've owned. The crack spreads have become a little compressed, refining margins compressed, but I'm trusting here that we need to own more of it, and it is breaking out. And then finally, we added to SLB. SLB, got to zoom out here. I mean, this has been very depressed since 2023, but I think it could be one of the main key beneficiaries of what's going on in Venezuela. So about 1% in T-Mobile, we sold that, and we're spreading it across these three names, and I want to get a little more energy exposure. I like what we're seeing in the energy space. I think that can continue here the first half of the year.
SLB saw its price target raised by Ray J from 43 up to 52, maintaining the outperform. I want to go back to natural gas for just a minute. It hit an October low yesterday. So you're saying you see clear signs of an upside move when it comes to natural gas? Because a lot of traders I talk to, they say that's the widowmaker trade.
Yeah,
we're talking about natural gas, very volatile, and you can lose a lot of money there.
That's a really great question. So Cheniere, really what U.S. natural gas prices are doing don't impact Cheniere. I mean, from the long term. U.S. natural gas prices have, I mean, there's been a pretty heavy reversal out of the mid-December kind of gasp for air, and they continue to go lower. It's U.S. natural gas prices, especially this time of year, are going to be matter on weather. And the widowmaker trade is actually a spread between the February and March contracts, because that's where the weather really starts to shift. But here's the interesting thing is Cheniere is an exporter. They get paid on volume of exports, and the spread between with European natural gas becoming more, moving higher and more expensive, you're seeing that spread starting to widen, and that becomes attractive for demand of exports via Cheniere.
All right. Jim, you also own Cheniere. I'm just looking at the chart. At the chart. It's down about 7% over the last 2 months. That seems to be kind of the range that we often look at for the market was kind of not making a lot of moves. This obviously underperforming over that time. Your view on the company and also Bill's buy.
Yeah, well, first off, I like the buy. It's a little bit uncharacteristic of you, as I know you, and I don't want to pigeonhole you, but you're more of a trader mentality. And I look at Cheniere and the way you were describing it as an exporter, as this is more of a long-term play. Now, you did bring in the spread between European contracts and American. I get it. But for you to pick this up here, I really compliment you, because this is a value play here. This is, hey, wait, there's a business here of exporting natural gas around the world, and Cheniere is the key linchpin in that. And I think that the price decline over the past several months, perhaps because of natural gas, as you're pointing out, Frank, is the good entry point. And we'll see if you stay with it for a long period of time. I love your ExxonMobil purchase. You said it's breaking out, but as you know, if you look at this over a long period of time, I don't know if the control room can give us a 5-year chart. I mean, the breakout, it is a breakout, but it's tiny in comparison to what it's been doing over the last 5 years. It's It's a long-term compounder. Thank you for that chart. And it's going to continue to go higher. Consider this. That 5-year chart is twice the return of the S&P 500. And over the last 5 years, crude oil prices have stunk. But as Bill points out, it's far more than crude oil prices for Exxon. It's refining, it's marketing, it's distribution. Good on you.
Look at you calling for a 5-year chart, Jimmy. All right, time now for... And welcome back to Halftime. Let's hit some calls of the day. We're going to start with Digital Realty, upgraded to buy from hold at HSBC. Analysts go on to say that we think market concerns on 2027 growth look overdone. Malcolm, you own this one.
Yeah, the data center segment of the commercial real estate space is a bit of a mixed bag, but I think DLR is probably the safest way to play that space, considering they've got some very long-standing relationships and their customers are not going to be walking away from those opportunities simply because there's a delay in powering on a data center or something like that. So if you're interested in being in that space, I think DLR is a good way to do it.
Those shares up just about 1.5%. Want to move on. Netflix, its target cut to 115 from 140 over at Wedbush. Netflix reports its earnings next Tuesday. By the way, Bill, you own this one. Looking at the chart, Netflix shares down almost 14% since they made that offer for Warner Brothers Discovery.
It's an ugly chart. I'm not interested in adding to this at this point. This is another name that's in the bottom third, the bottom quarter of our portfolio. It's a 1.3% weighting. I do, on the positive side, credit ourselves way ahead of this. We sold this about 115 area in our concentrated portfolio. It was one of our names in the portfolio where we own no more than 10, and look to get away from it. For here, I don't see a reason why it's going to turn around right now. I'm not going to call it, impaired or dead money just yet. I think it's a little too low. If you're bottom fishing, it is a little potentially an area to look at, but we're not excited for it here. I just kind of stay on the sidelines.
Quick question, we got to move on. Do you think it's a good deal?
A good deal. It's a tough business, to really say it's a good deal. I don't have a strong opinion right here, but but the market's telling you it's not.
All right. Moving on to one of the best trades in 2026, materials. CRH, big materials player, its target raised to 145 from 132 at Bank of America. Jim, we talked about this quite a few times. You own this one.
Do I talk about it as much as Citigroup?
Not quite.
Okay. All right. Well, I'll see if I can change that. CRH is a great long-term holding, and I'm not going to go through the numbers. Any one of you watching can look at the 1, 3, 5, 10-year track record of the stock and see that it absolutely crushes the S&P 500. Now, that tells you what it's done. What is it going to do? Well, we know that there's a heck of a lot of building going on, whether it's supply chain onshoring, new factories going on, infrastructure, and a lot of the aggregates, concrete, all that sort of stuff that needs to go into those projects comes from CRH. It's the biggest aggregates company in the world. It is twice the size of competitors Martin Marietta and Vulcan Materials, and it's 1/3 of the valuation. So I see bright things ahead for CRH.
All right, moving on back to the media space. Spotify to increase its pricing for its premium service to $12.99 a month starting in February. Malcolm, you own this one.
Yeah, Spotify's been a hard one to own the last 4, 5, 6 months. Pick your point, but I think it's setting up to give a really attractive entry point to anybody who's interested in that streaming model. Netflix has been a darling for quite some time until it ran into this speed bump, and to me that's kind of a pair trade. If you like Netflix, you should love also Spotify. So to me, the streaming increase in cost for the platform is going to be additive to revenue going forward. This is probably the place to be adding shares if you don't already own it.
Worried all about Netflix trying to encroach on their business, making deals with iHeart, trying to get some of those podcasts and other audio, which we think of as audio content formats, onto Netflix?
Well, Spotify also encroached on Amazon's territory with the entry of audiobooks, and it looks like consumers have been willing to pay up for that. So I think, if nothing else, it's really just showing that the model has staying power. Their customers are very sticky. The price increases don't tend to send people away from the platform. So to me, these two companies, Spotify and Netflix, are two that you want to own long term as part of your portfolio.
Spotify shares pulling back about 3.5%. Coming up on halftime. And welcome back to halftime. The metals complex pulling just a bit back from its all-time highs today, but the group is still sitting on some very strong gains over the past few months. Our Pippa Stevens joins us now with much more on those moves. Pippa.
Hey, Frank. Well, the perceived Iranian de-escalation is cooling the broader metals momentum today, with President Trump's decision not to impose tariffs on critical minerals, at least for the time being. also hitting the group. Now, that uncertainty had pulled forward buying, which we saw in the spread between COMEX and LME pricing, as well as building inventories in the U.S. But of course, metals have had a blistering run higher with lower rates, a weaker dollar, and geopolitical risks, all driving interest. Now, the AI trade also a part of this, especially for copper, which is the key for electrification. And the hyperscalers are taking note. Rio Tinto and Amazon Web Services teaming up, announcing today that the tech giant will be the first customer for copper from a Rio project in Arizona. Terms of the 2-year agreement were not disclosed, but this, of course, follows the miner renewing talks about a possible merger with Glencore amid the market's focus on metals scarcity. Frank?
All right, our Pippa Stevens back there at CNBC HQ. Pippa, thank you very much. Just kind of looking right now, a lot of notes about metals, as you can imagine, in recent weeks and days. Wells today saying demand for copper, aluminum, lithium, cobalt, and silicon expected to triple by 2030. You have so much metals exposure, Bill. I'm not going to read all the names. I'm just going to mention one, Wheaton, on a 5-day win streak. Just your view of the metals sector right now. Is this an investment or is this a trade?
This is an investment. I think we've been calling this a super cycle for quite a while. What you're seeing here, gold has had a lot less volatility than silver per se. Wheat and precious metals, they're going to have a little bit of more volatility tied to silver a little bit too. Some of these miners have good exposure. The thing about silver is China established export controls on silver at the turn of the year. And we've seen the Shanghai price of silver outpace the U.S. price of silver, and margins on trading this have continued to increase too. And it's going to continue to be sort of this feedback loop of volatility. I think silver can get to $130, but I don't think it's going to be a straight line. I'm also watching the gold-silver ratio. You're seeing that really break down to the lowest level it's been. That means silver outpacing gold since 2012. I think there's a lot of opportunity over the long term here, but don't chase it because it's the new hot item right now. In fact, I manage a metals fund and using metals futures, and really we've been kind of taking a step back and want to be on offense and really taking it from a trader's perspective that when the markets or when these are able to fall back, I'm able to use that as a buying opportunity rather than sitting with heavy core positions and managing the core positions as much. I think there's going to be a lot of opportunity developing. And as for copper, it's going to be a very undersupplied market for the foreseeable future. I like this move from Amazon. It's exciting, but a lot of this takes a lot of time to come to fruition too.
All right, speaking of 5-day win streaks, Cleveland Cliffs on a 5-day win streak as well. You're invested in there playing metals kind of on the industrial side.
Yeah, now this is a commodity producer. So when you're talking about commodities, as Bill, Malcolm knows, it's price of the commodity times volume minus cost. When you look at price for steel, it's been rising recently, and volumes seem like they're hanging in there as well. The key element here is, does automotive production pick up? We've seen better than expected sales of automobiles, and if we're reshoring automobile production, then that volume of steel that's going into automobiles, 30% of Cleveland Cliffs business, should pick up with it. Now, the real kicker here is Cleveland Cliffs has some idiosyncratic, some very specific things going on. They have taken their revenues up tenfold over the last 7 years by making a lot of acquisitions. And with those acquisitions has come some hair, higher than expected debt levels, some contracts that have recently rollen off that were frankly punitive to their P&L. But as I said, those have recently rollen off. So as we go into 2026, it will be interesting to see if that hair that I just described gets cut down and we can see the beauty of the underlying business come through. I think we will.
All right, Cleveland Cliffs shares up almost 4% right now over the last 6 months, up over 60%. No 5-year chart this time. All right, welcome back to halftime. Aerospace and defense stocks hitting a record high today, but UBS is out with some cautious commentary on the sector heading into earnings. Jim, let's start with you. You own Lockheed Martin, which is on a 5-day win streak.
Yeah, it's had a nice start to the year, Frank, and I think we understand the fundamental reasons why. There are hot wars, hot conflicts all over the globe, and frankly, notwithstanding a pullback in rhetoric or threats around Iran, I don't think that's over either. We know last week that the president ramped up or called for ramps up in production of missiles and other defense products, and that benefits Lockheed Martin. Had a terrible year last year, but as I said at the end of 2025, this is the one to watch going into 2026.
Bill, quick word. You own 2 names in the space. Leidos is one of them. Your view on defense overall?
I like the defense space. I wish we had more exposure a few months ago. We're increasing our exposure in Leidos. I'm expecting it to break out. I think it's tough right here to say you're going to continue to see this type of performance from it. I would like to see it take a little breather and reevaluate to add more at that time.
All right. Looking at those shares, they're pulling back just about 0.5% right now. All right, stay with us. Final trades, they're coming up on halftime. Welcome back to halftime. We are back with final trades. Malcolm, kick us off.
Yeah, I'm going ServiceNow. I think this one starts to separate itself from the rest of the software herd from here.
All right, ServiceNow at a 52-week low. Bill, coming over to you.
ICE, very diversified portfolio. They have great exposure, I think, in the mortgage space, too. They own this building, New York Stock Exchange. It's breaking north up out of a bear flag pattern, so I like it right here.
All right, Jim, you get the last word.
Apollo Global. I mean, this is the leader, in my opinion, in privates. Last year, it was very tough for alternative managers, but at the end of the year, we started to see a bid come back to it. We're seeing that continue this year. I know a lot of people at Apollo, and I frankly think they're the smartest people in the room. So I'm happy to be in Apollo, and I think that's the final trade for today.
All right, Apollo shares up just about 0.5%. That's going to do it for us here on Halftime. We got the...
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Thursday, January 15th. It's 2:49 p.m. Eastern Time. Market is still active, and as you can see, the Dow is up 0.73%, NASDAQ is up 0.55%, S&P 500 is up 0.46%, and the Russell is up the most, up 1.27%. We just saw Tom Lee, and we also saw some clips from the halftime report. We're going to analyze the stocks and ETFs that were talked about on the shows. So let me show you the list here that I've got for you today. And so we're going to look at the S&P 500, the QQQ, the Dow, the Russell, the Euro stocks, the VIX, which dropped a little bit today. We're going to look at about 30 stocks. And I've got the strongest stocks highlighted at the top, okay? And the weakest ones on the bottom. The ones with the blue flag are the strongest ones. I've already previewed all of these. And we'll also take a look at some of the Mag 7s. We'll look at... some member requests, the following 5 stocks right here too. So let's first find out why the market's moving up. And let's get a quick little synopsis here. The Dow rises 0.7, you can see here. And the Russell 2000 leads with the 1.2 advance. TSMC jumps on a 35% Q4 profit surge, bullish AI outlook. Semiconductor sector outperforms as peers rally on TSMC's results and guidance. Goldman Sachs, Morgan Stanley, and BlackRock post double-digit profit gains and earnings beats, boosting financials on strong trading and deal making. Rotation into the small caps, banks, and value stocks accelerates as traders seek broader market exposure. The Dow rebounds from a 2-day skid, supported by financials and small cap strength. Lower than expected jobless claims and an earlier upside. Oh, looks like we got a quick little change here. Unexpectedly low jobless claims and an earlier upside. Empire State Manufacturing reading supported risk appetite. Oil prices eased on reduced Trump-Iran tensions, while falling mortgage rates added to the positive sentiment. Traders focused on ongoing earnings, economic data, and sector rotation. And what's this down below? Trump's housing affordability push and Fannie Freddie IPO uncertainty noted as marginal market themes. Okay. Here's the heat map that shows us how the market, the S&P 500, is performing today. You can see NVIDIA up 3.05%. A lot of the semiconductors are up. Some of the software stocks are up. And Google's down slightly, down 0.95. Apple's down. Microsoft is down. But Amazon and Tesla are up. So is Meta. The healthcare stocks are mixed. Looks like basic materials are looking pretty good here. Utilities and real estate looking good. Industrials looks good as a sector. Let's take a look at that for a moment. We can look at the groups and find out which specific sector is strongest today. Now, yesterday, technology was not doing so great, but today it's up 1.31%, and utilities is up 1.31%. Industrials, real estate, basic materials also look good. All right, let's get into the charts now. What we're looking at here is the Ichimoku indicator. It's my favorite indicator. It's a Japanese indicator that was published in the late 1960s in Japan and brought here into the U.S. and basically the West in the 1980s at some point. It's a very comprehensive indicator. So what we've got are the Japanese candlesticks, which represent price. Tenkan-sen is the 9 period. Now, this is actually the highs, lows divided by 2, which gives us the midpoint of each candle, the last 9 periods. And it plots it right there. That's called Tenkan-sen. This is called Kijun-sen, the red line. That's the 26 period, so the midpoint of the last 26 periods. Again, to get that midpoint, you got to look at the high of the day, or in this case, the week, the low of the week, and then plot that the midpoint of each candle and get the last 26 periods, and that's plotted right there. We want the green line above the red line. That's important that the faster moving average is above the slower one. Then you've got the Chiku span right there, that white line. It's a lagging line. It's the actual current price, and it's projected 26 periods into the past. And you want that white line to be above the candle 26 periods ago. That signals strength in the market. And then finally, you've got the cloud itself, the Ichimoku cloud, which is comprised of two lines. The Senko span A, which is the midpoint of these two moving averages, projected 26 periods into the future. That's where you'll find it. And then the Senko span B, which is essentially the midpoint, okay, of the last 52 periods. Instead of being plotted under the candle, it's plotted 26 periods into the future. And the thicker the cloud, the more bullish the sentiment and strength of the direction. And right now we have a very thick cloud here. And so that's very good. It gives us some insights about what might be transpiring in the future. What we don't want to see is the Senko span A crossing under the Senko span B. That's a bearish situation like it was right here. We had our warning here, and then you could see that the price had dropped, back there in 26 periods ago. So that's how we know. We know we're in a bullish market or a bullish stock or ETF when price is above the cloud. When it's under, like it was back here in 2022, when it was inside the cloud or under it, that was negative. And you can go back even further. I mean, we can go back to 2008. One of the examples that I like to show where if you were in it, you probably lost a lot of money here. If you remember 2008. So if you basically the rules of the indicator, it's a rules-based system, is you'd never want to be adding new positions when price is inside the cloud or under it, or technically under any of the moving averages, right? And the first signs of weakness happened right about here, back on December 14th of 2007, where price got under the moving average right there, and then continued. It never basically stopped. It reached a drop of about 53.9% in 1.2 years. And it took a very long time, multiple years, to get back to those levels again, to the highs of 157 for the S&P 500. So, yeah, we want to be on the right side of the trade, and that's what this does. It's a simple approach. You don't want things to be too complicated when you're trading. And I utilize both the weekly time frame, which we just saw, and the daily time frame. And so what I'm looking for is a confluence in both of those time frames, telling me that there's a strength in any stock or ETF that I'm looking at. And we have it with the S&P 500, the SPY. Right now, the market's live. Like I said, it's 2:57 p.m. The seconds are still counting. That's why you'll see the percentages changing here. But overall, we're still in a very strong uptrend. Like I said, also on the daily, let's throw on some lines. These are some levels, support levels and resistance levels. Right now, we are above that, what was a resistance level, that 691.66. We had briefly dropped under it yesterday, but still held up above the Tenkan-sen. And now we are above 691.66 again. So we're back in bullish territory. It's not a very bullish candle here. It looks like there's a little bit of selling that's happening now towards the end of the day. You can tell from the red candle. If I switch it to a 5-minute chart, there's the sell-off. That's, I wouldn't call it a sell-off precise exactly, but it is in fact dropping from the highs here today, which were around 12:10 p.m. It's dropped about 0.38%. The QQQ. Now that we know all the rules, we can go through this very quickly. We don't really need to spend too much time, right? So the the QQQ ETF is also dropping after, making a move up. Let's look at the 5-minute chart and see how that's looking. Yeah, it's looking a little bit more weaker, but we are still holding up above the 200-day. We've entered the cloud on the 5-minute. Remember, you can use this indicator, the Ichimoku indicator, on multiple time frames, all the way down to a 1-minute chart, which, as you can see here, around 2 p.m., it seems that there's a little bit of a sell-off that's taking place. The Qs have dropped about almost 0.5% since around this time frame here, around 2:01 p.m. The Dow Jones on the daily chart still looking very bullish. I think this looks certainly very much stronger than the SPY and the Q currently. Here's the 5-minute chart, holding up still, although it is also entering the cloud just now. So the Dow looks good on both time frames, the daily and the weekly. Here's the Russell 2000, which is, of course, is the strongest one, right? And that one is holding up above that 258.20 level, which goes back to, well, where does it go back to? Oh, you know what? That's actually a daily level. It's a light red color. It goes back to these candles here. So you can see we've been above that 258.20 now for 5 days, 5 trading days, and that's a very important thing. That's what we want to see. Up 1.25% right now. I like it. And here's a 5-minute, still looking bullish, holding up above the cloud, where generally we'll find support. And you can see here multiple, candles on the 5-minute chart holding right above that cloud. So this indicator, like I said, is something that's utilized by, also in the past I've mentioned this, that it's used by a lot of financial institutions, and it's a very strong, it's a very, like I said, comprehensive indicator, because it has all these mathematical equations that create it, and we can see the weakness in the market when price gets into the cloud and starts dropping through it. FEZ, the Euro stocks in the 5-minute, is dropping right now at 2:59 p.m. You can see that currently down 0.20%. Here's the weekly chart, though. We are still in a very strong uptrend on the weekly, the longer time frame, and on the daily chart, we've had these little pullback. Nothing to be overly concerned about, in my opinion. This is not like a huge sell-off. It's only down 0.24%. The VIX has also dropped, which is a positive, right? So yesterday we had a shooting star candle that formed by the end of the day on the VIX, because it did reach a level of around 18.13 and then finally closed around 16.7 or so. So some of that volatility came out of the market, and we do want this to be dropping. It's back under the Kijun in a much more safer spot at around 15.5 is the numerical value for the VIX. All right, let's go to the stocks they talked about on the show. Like I said, I've got the strongest ones with a blue flag. What that represents essentially is that these are going to look good on both the weekly, as you can see here, and on the daily when it comes to the Ichimoku cloud. It's going to meet all the criteria that we're looking for. So gold looks good. GLD is just kind of stalling here, down 0.46%, maybe a little bit of profit taking happening here. It's just basically, it's been in this little funk here for 4 days in a row. Okay. It has not really moved much. Generally, that's what we call building a base. And so as long as it remains above these levels here, I think that's good. That's okay. And we'll see it hopefully pop soon, maybe tomorrow. Doesn't look like it's happening today. The Granny Shots U.S. Large Cap ETF, that's Tom Lee's ETF, right? This one here is looking okay, but we've got what's called a gravestone candlestick, and that's a reversal candle on the daily. On the weekly chart, we are breaking through that 2573 level, which is a daily level. So, overall, I like it. Nothing negative here. It has a blue flag. ITA is another ETF they talked about. It's called the U.S. Aerospace and Defense Index Fund, with all the talk about war and everything. Obviously, these are the types of ETFs and stocks that are going to do well in this environment, which is unfortunate, right? We don't want war, do we? Up 0.82%. Here's a weekly chart, looking strong, very strong, right? So I like ITA. KBE looks good too, although it is stalling at that 63.74 level. That's a weekly level right there, based on that prior shooting star, okay, from November 29th, 2024. So it needs to break through that level for a continued move up. It looks like we're towards the end of the week now. Maybe tomorrow it can break through and close above, but right now we're not there yet. It's still a strong chart on the weekly and on the daily overall. KRE is the regional banking ETF, and that looks good today, up 1.82%. Here's the weekly chart, also looking good. LMT, Lockheed Martin looks good. Here it is in the weekly chart. Another aerospace and defense stock breaking through the cloud. Here's the daily chart. Okay, a little bit extended at these levels, but there's a lot of demand right now for this type of stock. RIO, Rio Tinto, basic material sector, industrials, metals, and minerals is what this industry that it's in. Also up 0.80%, has the blue flag, looks good on the daily and on the weekly. SLB looks good on the weekly, just broke above for a second week above the 200-day moving average on the weekly chart. And we have a future bullish cloud here on the daily chart. Also looking good, but a little bit extended at these levels. It's really taken off. SLV looks good, but again, also a little bit extended. It dropped a little, down 0.97% currently. It looked like what happened was today with silver, it actually gapped quite a distance down here, right? And then it started getting bought up the rest of the day. So if we look again to a 5-minute chart, we can see that. There's the gap down, and there's the buying that happened all day, right? So you can see so much just by using Japanese candlesticks. They tell us so much of the story, right? Remember that if it's a blue candle like this, the opening price is where the body begins, and then the body closes, which is going to be around 4 p.m. It hasn't closed yet. It's the current price right now, the 83.69, right? But that's going to be where it closes. If the bottom, that's going to be the opening price is the bottom of the body, and the closing price is the top of the body, not the wick itself. Because sometimes you're going to see a wick. And that just means that that's the high of the day, and the lower part of the wick is the low of the day. That's all that represents, really. If it's a bullish candle, it means that the opening price was here and the closing price is here. If it's a red candle, it means the opening price was at this level, price level, and then it closed at this lower level. Hence why it was red. Okay. This is a quick little summary of the candlesticks. SMH, and I do have a Japanese candle. There's a cheat sheet. If you want to check out my prior video, I shared information on how you can see the cheat sheet that I have. So check out my prior video. SMH, looking good, but it also, same situation, gapped up and is getting sold off a little bit here today, up 2.87% from the gap up. Here's the 5-minute chart. So you can see the sell-off that's happening now in the afternoon. Around 1:40 p.m., it's dropped about 0.6%. XOM, ExxonMobil, inside this, between the opening price and closing price, it's just been stuck in here on the 5-minute. Here's the daily chart. You can see it's a spinning top, a reversal type candle, down 0.55%, but overall strong on the daily and on the weekly chart because it broke through that 126.34, hitting all-time highs now. Exxon is, okay? Now, this is a ticker symbol you've probably never seen before unless you have TC2000. It's called the IX1090. It's not something that you can trade, but it is a proprietary ticker symbol for TC2000, the charting platform I'm using. And why is this significant? Because it's basically it's telling us, it's showing us the basic material sector here, right? It's copper. And if I click above here, there's a little thing that I can click on. It's called Open Component Watch List of IX1090. And that will show us the stocks that are within it, basically that comprise it. So you can see the majority of the copper stocks are down except for SCCO. Okay, this is the actual ticker symbol, the IX1090, which is up 0.71. So copper looks good on the weekly and on the daily as a industry and sector. Now, the rest of these stocks are bearish. There are quite a few, and they brought these up on the show. So we're going to quickly dismantle why you really shouldn't be buying any of these stocks based on, again, the Ichimoku indicator. So let's get into it. I'm not going to spend too much time because these are, in my opinion, losing stocks at the moment. They're not, when I say losing stocks, they're stocks that are weak. They're in a weakened state. And personally, I'm looking for strong stocks that are showing strength, stocks where there are more buyers than sellers. And these are compromised, is a good way to describe it. APO, for example, has dropped and is currently under both moving averages, but it is up 0.37% on the daily chart. If you look at the weekly chart, it's technically above the cloud, but the future cloud here on the weekly is bearish. Remember what I said at the beginning of the show. The Senko Span A should be above the Senko Span B. Here's another thing that I see on the weekly chart that I don't like on this particular stock. The Chiku span. Remember I said the white line should be above the candle? It is under, okay? So for 2 weeks now in a row, it's been under because you can see the closing price right there, and there's the white line, and then it's still under right here. So I'd stay out of that one. BMNR, that's BitMine Immersion Technologies. Tom Lee was appointed the chairman of BitMine Immersion on June 30th of 2025. And of course, he talked about Ethereum and everything else, but currently down 3.25. Here's a weekly chart that doesn't look particularly great. All right. It's under the cloud. Here's a daily chart, also under the cloud currently. So there's not a lot of buying happening here. They're probably, this whole marketing thing with Mr. Beast. I don't know if that's going to materialize into anything, but we shall see in the coming weeks and months, I guess. Right now, we're not seeing it. Today, at least. CLF is another stock, Cleveland Cliffs, that I wouldn't be jumping into here. Now, it does look good on the daily chart, okay? But remember, in order to get the blue flag, we need confluence of both time frames, the weekly and the daily. And on the weekly chart, all right, the Tenkan-sen is under the Kijun-sen. Remember, the faster moving average should be above. It's also right under the 200 that's declining, the 200-day moving average there, the dotted yellow line. Last time it reached it here, you can see what happened to the price. It dropped, right? It's a very strong level of resistance. Otherwise, I like it. Those are the 2 week the 2 week points. Coinbase is another stock. That they talked about on the show. Down 5.67, 5.7. You can see it's still dropping. Under the clouds. Skip that one, folks. That's on a weekly chart. Here's a weekly chart of CRH, which looks good on the weekly chart. But there's must be something wrong with it on the daily. Oh, yes, there is. It's under the moving averages, okay? It looks also like the Tenkan-sen is crossing under the Kijun-sen. And look, the Chiku span is underpriced. So hopefully you're starting to see how this can be a very important indicator to utilize. And Ichimoku in Japanese stands for at a glance. So we can quickly, visually see whether or not we should be in a stock. If you look at this closer, it's developing what I call a megaphone pattern. I just noticed it. So there's the move up, okay, and there's the move down, the megaphone pattern. So you've got a series of now lower lows here from the prior lows, right? But we still have higher highs, hence the megaphone. That's a negative pattern. I also use this indicator, the directional movement index down below here. And this also is looking negative. As I've mentioned before, when the red line here, the negative DI9, is above the green line, the positive DI9, that's negative, right? And the ADX9, that white line that you see right there, that just represents momentum. If that's increasing, if the momentum is increasing, the red line is above the green line, that's actually quite bearish. That means that there's more of a negative momentum to the downside because the red line is above the green. All right, let's keep going. DLR, Digital Realty, is under the cloud. I'd skip that one. Obviously, you can see it's very negative, right? ETH, inside the cloud. Again, shouldn't be adding positions here when price is inside the cloud. Is it showing a little bit more strength recently? Yes, it is. You can see that we have a series of higher highs and higher lows here that are developing. But I would hold off. It also hasn't taken out that prior high right there. What else? IBIT, that's also inside the cloud. Yes, it's been showing a little bit of strength. It's down 2.27% today, and it's inside the cloud and under the 200. No on Bitcoin. ICE. Now, this is Intercontinental Exchange Inc. This one does look good on the daily chart. Nothing negative to say about it on the daily, except for the fact that it is down 0.23% today. But on the weekly chart, as you can see, we have a bearish cloud. And Tenkan-sen is under Kijun-sen, and the Chiku span is underpriced. So no on ICE if you want both time frames to give you the same picture. Why not go for the stocks and ETFs that are showing strength in the higher time frames as well? You'll have a higher, success ratio in your trades. By the way, just a quick little thing I should mention is that earlier today, I posted another members-only post to Legend level members. Let me show you guys what I'm talking about right here. If you go to my channel, Blue Cloud Trading, and you want to get access to my additional content, well, one thing you can first do that's free is hit the subscribe button. And if you want to get these videos, okay, when they are posted and get a notification, you do have to hit the notification bell, right? Then these are time sensitive. You want to get this as soon as possible. Subscribe, hit the notification bell, and it will pop up in your, I don't know, I think it comes up in your emails or whatever. Or next time that you're up on YouTube and you click on it, and then you can see the notifications that pop up. Like right now, I've got like 9 notifications for myself, right? Okay, so that's one thing you can do. That's free to help support the channel. We're at 27,200 subscribers. The next thing you can do if you want to really get more information about trading and learn a little bit more, click the join button and then select Blue Cloud Legend. That's the highest level. That's where you'll get the daily trade updates that I was just talking about. So I had some nice, really profitable trades today that I closed out of, took profits in, and you can find out what stocks they were by becoming a legend level member. If you want to get the weekly video, become a Blue Cloud Trader level. That's a different level, right? You won't get the daily updates though. And if you wanted to just support the channel, become a Blue Cloud supporter. You can see the price changes for each level. So make sure you click the right one, whichever one you choose to. All right, guys, let's get back to the stocks now. All right. So IGV is the next one we're going to look at. That's the software index fund ETF. It's under the moving averages and entering the cloud. No, on that one, it's down 1.24%. JP Morgan, let's take a look at this one. This one is also dropped, and it's currently under the Tenkan-sen. It was actually a gap down this morning and then continued to drop. Here's a 5-minute that shows it, the whole process I'm just talking about right there. So here we are on the basically on the, there is the opening price. Let me go back to the daily. Hold on 1 second. I'm sorry. I was looking at these two candles. JP Morgan on the daily chart. Here it is. So it actually, I'm sorry, it gapped up a little bit and then started going up, and now it's kind of getting sold off. That's what that wick represents. So there's the daily chart, and here's the 5-minute. I was trying to figure out why that wasn't doing exactly what I expected it to. So there was a closing price, that dotted red line. There was a slight little gap up, moved up, hit that, came close to the 200 on the 5-minute chart. Okay, notice how all these rules apply on any time frame that you utilize. There are people that are watching this on the 5-minute, and then they're trading based on the 5-minute, obviously, right? And they're helping to push the price either up or down throughout the day. And you can see it stayed under the 200. Now we got above it slightly here, and then came right back in. So you're going to get a lot more, you know, you're going to get a lot more noise on the shorter time frames, obviously. And this is more for day traders anyway, right? So daily time frame and weekly are for those who don't want to day trade and just want to, like, you know, enter at the most optimal time, you know, but make sure that that weekly looks good. That's really important. All right, next, LDOS, Leidos Holdings. As you can see here on the daily chart, it's under the cloud. I'd skip Leidos, even though it's up. LNG is under the cloud, but showing a little bit of strength today. I'd stay out of that one too. Netflix is under the cloud and still declining, down 0.49%. We talked about it yesterday too. Big surprise. NOW, ServiceNow, still declining. Stay out of that one. That's a loser. Look at it. I mean, it has dropped quite a bit. The last time it even made sense to hold it, to be in this position, to be in it, was back here. You can see it clearly right here. We were above the moving averages. Tenkan-sen was above Kijun-sen. That was back on July 7th, 2025. Since then, it's dropped 36.85%. Hasn't looked back. Not interested in moving up. As you can see here, it's been declining, lower highs, lower lows, in a downward channel. And it's impossible to exactly pinpoint when this thing is going to stop. But what we can identify is when money starts coming back into it, right? And we're going to see that when price finally breaks through the cloud. And by the way, it's going to have to do it on the weekly chart too, because this is a weekly chart. You can see it looks really, really bad right now. So stay out of that one. Look at the directional movement index, confirming that this is not something you should be getting into. Red line moving straight up. Green line is moving down. The ADX is moving up. Like I said earlier, that's very negative. Spotify, also doing the same thing on the weekly chart. It looks like by the end of this week, it's probably going to close under the cloud itself. So you should stay out of adding this position, okay? T-Mobile, also same situation, under the moving averages. Look at the ADX moving up, okay? Multiple weeks. You could have said, oh, you know what? I'll buy it. It dropped like from this point, let's say, I don't know, from here. It dropped, say, I don't know, 10%. And maybe you bought it here. And then guess what? It dropped another 10% to this point. And guess what? It's dropped another 9%. So it's been just continuing to drop. It's impossible to pick the bottoms. XLF. I've been trading for a long time, for over 20 years. Okay, so I can tell you from my experience, you should never try to pick a bottom. Wait for breakouts. Wait for positive breakouts. XLF looks good. Up 0.31% on the weekly chart. It's holding up above the Tenkan-sen and Kijun-sen right there. they're at the same exact level. That's why you don't. Sometimes that will happen with these moving averages. They can be at the same exact level because they're taking the highs and lows of the last 9 and last 26 periods, and you'll also notice that they flatten out. You don't see that with traditional moving averages, but because we're taking the highs, the lows, dividing that by 2, and getting them that plot right there, you will see it flatten out. And when it does flatten out, it actually becomes a much stronger level of support generally, for the most part. Not always, but majority of the time. Okay, so XLF, why does it not get the blue flag? Well, we got to look at the daily. You can see here that it's under the Tengensen, under the Kijunsen, and it's up 0.28%, but I'd hold off on this particular ETF. There might be some stocks that look great, though, within this ETF, but this particular ETF I'd stay out of for now. All right, or at least manage it. If you have a position in it, you just keep an eye on it closely, right? Maybe you switch to another time frame, like a 30-minute, for example, which also looks terrible right now. But anyway, let's get to the next group here. Tesla is under the Kijunsen. It's under the Tengensen, but it's above the cloud on the daily. I'd stay out of that one. Here it is on the weekly chart, under the Tengensen. Apple is also under the 9 period there on the weekly, and under the cloud on the daily, so it does not get a blue flag. It's down 1.05. Meta is up 0.26, but it's under the cloud, so I'd skip that one. Microsoft is under the cloud and still declining after it dropped through that 468.35 level. That's a monthly level that I talked about. Switch it to a monthly for a moment so you can see, which was taken from this candle right here. So yeah, I'd stay out of Microsoft. Amazon, 2 days in a row where it's under the Tengensen. It looks more bullish than the rest because on the daily chart, it looks like the single span A is going to cross above single span B soon. Okay, and let's look at the weekly. Weekly, we do have weakness here. Tengensen is under Kijunsen again. So yeah, these are not looking great. Where are the other Mag 7s, you might ask? Well, they might be in my portfolio. It's possible. And I do cover those in the members only videos. So become a member, guys. All right, now we're going to look at some of our members' requests. EEM, emerging markets. Let's look at that, which is up 0.59%. Here it is on the weekly chart. So I like it. It looks great on the weekly. You can see the difference here again with the ADX now moving up, but the green line is moving up and the red line is moving down. And the green line is above the red line. So we've got confirmation that this, at least on the weekly chart, is very bullish, right? For 2 weeks in a row, actually more than that, 4 weeks in a row, it broke above that 56.31, that prior high, and it's continuing to move up. So emerging markets looking good. Here's the daily chart, also looks good, right? Got a future bullish cloud. We've got everything lined up the way we want it to be. GLSI looks good on the daily chart, even though it's down 2.32%. We have a bullish cloud, prices above. It's a little bit more volatile than some of the other stocks. You can see the big price moves here with GLSI. That's the daily chart. Here's the weekly chart. So you can see that it, if you go back in time, I mean, at one point back in 2020, right around that point, December of 2020, it was around $156, that stock, and it had dropped 81.83% from where we currently are. It actually dropped more than that. So it dropped like from there down to these lows, about 94.9% drop. Now, what's happened with GLSI is it looks like it's been consolidating for a long time, since 2022, right? You see that consolidation area where price has been stuck. And then it's finally breaking through these highs. Do you see this high and this high? Draw that trend line, and you can see that we broke through that. So now, approximately 3 weeks in a row, we've been staying above those levels, and it's continuing to move up. So the cloud itself is moving up, but notice how the single span A and single span B are at the same exact level. That's because it's like hyperbolic at this point. It's just moving straight up on the weekly. And on the daily chart, it pulled back a little bit, 2.01%. But overall, I like it. But just be careful with a stock like this because there's huge moves that are happening here with it. Okay, AVGO on the daily chart, Broadcom under the cloud currently, but it's up 1.12%. What area should you be watching? Probably the lows here. of that candle. What is the low there? 321.42. You can see that we came close to that level. So 321.42 is a level I would watch. I obviously wouldn't be adding a new position here, right? We got to wait for that. But it seems to be moving up slightly recently. You can see the higher low right there. So it's a mini upward channel that's developing here with Broadcom. Hopefully it will turn into something. It won't break through this level here. That's important. What about, and here's the weekly chart for you. All right. You can see it's currently technically under the Kijun, but right on the brink. GE Aerospace on the weekly chart above 316.67. It's at 318.25 right now, holding up above that weekly level. I like it on the weekly. Nothing negative about GE on the weekly. It looks good. Even the directional movement index is telling us that. However, on the daily, 2 days in a row, it's been under Dickinson. Not the end of the world. Again, it's what's happening. I can see a symmetrical triangle there. You see that right there? So that's getting squeezed in, and I think once we'll have an answer soon enough. Maybe it will. Let's see here, January 22nd. You can see up here at the top. See how it says next earnings, January 22nd. That's coming up. So you're going to see either, I think it's an unknown which way it's going to go. It's based on the earnings announcement, and then we'll see it either spike up or spike down based on the earnings. So just be careful with that. Anytime that you're holding a stock or into earnings, recognize that there's a lot of probability that it could decline significantly, but then there's the other side of it where it can also just take off. Okay, like you can have a 10, 20, 30% move up, just as easy as you can have a 10, 20, 30% move down. So if you don't like volatility and you don't like that type of action, and you don't feel as confident with your trade, then it's usually a good idea to exit the trade and then wait for the earnings announcement. And then based on the earnings announcement, you can decide to come back into it, after the earnings come out, if you want to hold that position. Okay, let's go to the next one. HUN. Oops, here we are. Huntsman, basic material sector, chemicals, on the daily chart. Okay, I like it. It looks good in the daily. ADX is good, moving straight up. This too has been a stock that has been, from all-time highs back in mid 2022 was a $41 stock. It dropped. Let's measure it. It dropped about not exactly, but about, let's see, 81.6% in that short period of time, in approximately 3.7 years. Now, since this point, if we measure from here now, from the lows, where it reached around $7.43, it's moved up 62.48%. So on the daily chart, it looks good. Profit margins are still negative. Sales growth rate is still negative, but it's been improving here technically on the daily. However, going to the weekly chart, it's still under the cloud. And although it is showing a lot more strength here, and it does appear to have broken through, you see this high? That happened this week. It's still under the cloud, and there's a higher probability that it might stall once it reaches that level. So just keep that in mind. The 200-day, it's going to take a little while for this thing to break through. I mean, just to break through, we're talking about it has to make a move of about 30%. So it's really up to each trader. And you can look, I mean, if you want to hold a position and just make all your decisions based on the daily, that's your prerogative. And everyone has to make their own decisions. But just recognize that if you're looking at a weekly chart, you can, and the weekly is also weak, it doesn't make sense to be holding, to be entering a new position. What I would be doing if you have a position in this, and I don't know if you do or not, but if you have a position, it's obviously now in an uptrend, and it just makes sense to hold here and utilize the daily time frame as well as, say, maybe the 2-hour, which is going to give you some more shorter time insights, or the 1 hour, or the 30-minute, and you can see how HUN looks good on these time frames as well. Guys, that's going to do it for this video. Now, you may like this software that I'm using. It's called TC2000. You can actually get a $25 coupon for it. Okay, so you can try it out for free, and I recommend it if you want to get involved with learning about charts. If you have a mutual fund, if you have money in the stock market through your 401k or your IRA, It's imperative. When I was in my younger years, I decided it was really important for me to be in control of my finances and not allow others to manage them for me. Why? Because they don't have necessarily your best interests at heart. You know what they have at heart is making money off of the commissions that they make. Okay? That's their bread and butter. They don't care whether the market's going up or down. They just want you to be invested in the stock market all the time. And believe me, there are times when you should not be in the stock market. I mean, okay, let's go back again. Let's go back to the S&P 500 for a moment, and let me switch it to a monthly chart. Okay, and all we need to do is go back to 2008. Oh, you can go back even further, back to remember 2000s? Some of you might. There's also some young people on this channel. But back in 2000, you can see the big drop that happened when price got under the 10 and in the monthly chart. Okay, look at how many years. These are the years down below. I want you guys to let's measure that. That was September 29th, 2000. That was the dot-com collapse. Remember that? And it dropped down to these levels, about 46% in about 2.1 years. Now, how long, folks, did it take to get back above these levels? Look at that trend line. Do you see that 157.40? That's from 2000. Okay. Here we were in 2008, 157.40. And then we finally broke through it here on this candle. Do you see that candle right there? That was in 2013. It took 13 years to get back above that level. Crazy, crazy. So technicals are important, and learning about them is very important. If you guys are interested in learning about TC2000, go to my channel here and click on right here next to the link for joining. There's also a link here to join you, so you can either hit join here or here if you want to get access to the member-only videos. If you want to get access to the TC2000 stuff, click here. 9 more links. This will pop up a little information about my channel. Scroll down. There's a whole bunch of links here you can check out. But this is the one. It's the third one down. tc2000.com/download/Blue Cloud Trading. Click on that. It will bring you to this page. You enter your email. You can download the software. And like I said, you will receive a $25 coupon courtesy of Blue Cloud Trading. And the only thing is, to be eligible, you should not have been using TC2000 service in the last 12 months. That's all. And here's the pricing up here. Click on that. Software plans and data. So select monthly, so you can, and there you can see basic $24.99, exactly the cost for the coupon. So you can use it for a month and try it out. And then if you like it, go to the premium. I recommend premium because there's more features here. Okay. Alrighty. Well, that's going to do it. Thanks for watching, guys. Appreciate you all. Have a great rest of your evening or day, wherever you happen to be in the world. And I'll catch you all in the next one.